Dear friends, let's look into copper trading process. So we will be looking into what is the trading process, how price in copper moves, what are the factors copper movement is depend on, which are the emerging market in world who are using copper, how supply disruptions happen in copper, what is the metal substitution, this impact the price of copper. Then we will be looking 4 steps how we can do the trading in copper. The next, how trader has to decide trade in copper. Then we will be looking copper trading strategies. There are few strategies. We will be looking few indicators and candlestick pattern, how we enter and exit in the copper, how we can enter in trending market and consolidating market. Then we will be looking technical analysis, what are the patterns, what are the indicator, oscillators and candlestick. These are the parts of technical analysis. So let's look into first from start. So trading process for copper. So copper always move with the GDP most of the time. This is in sync with that. If global economic growth is healthy, then copper moves because demand for copper increases. So copper is a red colored metal which has been first used by humans, and this has been used in microwave heating systems. Copper is also like silver and gold, and this is most widely used in electricity products. The price of copper is depend upon variety of factors, and the factor is global economic growth. If the health of economy going uptrend, copper price increases. If it is decreasing, then because of less requirement inward, copper price reduces. So if the global economy in period of sustained growth, the price of copper increase because the demand for metal increase in the industry, and in case of economic slowdown, as there is a less expense in infrastructure inward, so the copper utility reduces, the utilization of copper reduces, so the copper price decreases due to oversupply. Emerging market for copper is China, India and Brazil. So if the demand in China, India and Brazil increasing, then the price of copper usually increase. If decrease, then this decrease the price of copper. There are environmental factors and political also which impact the copper price, as because the supply chain of copper getting impacted. In 2007, Bolivia had significant sway over the copper prices. When the mining industries was nationalized, the supply chain was disrupted, and due to less supply and high demand, copper price has increased. There are some environmental crises. In environmental crisis, earthquake and landslides, because of that also copper production impacted and spiked $2.45 per pound, and this has happened. Earthquake impacted Chile, and Chile is the top supplier of the copper. US housing market. So copper is widely used in construction of homes and the use of copper in plumbing and electrical wiring. So in case US non-farm payroll and US GDP data releases, this impact the price of copper, and some if industry changes use of copper in place of nickel, lead, iron or aluminum is used in place of copper in power cables and electrical equipment, then the copper become oversupply and the price of copper getting reduced. So there are four ways to have trade in copper. First, we have to see which asset we are trying to trade in copper. Thus, there are a number of ways we can take a bullion bars coins from the metal exchange. We can trade in copper future, or we can invest in shares of the company who are working in copper industries and exchange traded funds also. So when we trade in copper, we should be able to trade in future contracts. High grade copper is the copper future market for COMEX division of New York Exchange. COMEX copper also can trade spot and current market price. Copper future market is LME, also we say as a London Metal Exchange. High grade of copper LME can be traded spot but mostly traded as a future contract. LME contract are priced for 3 months in advance. Instead of trading copper commodity future, we can trade in ETF copper. Alternative way to gain exposure in copper, we can invest the companies who are doing production and mining in copper. Glencore are through mining stock ETF such as a Global X Copper Miners ETF. How to decide trade in copper? Once we have decided which copper link asset we want to trade, we need to decide which financial instrument we want to trade it. And copper is used in futures rather than copper bullion. This means future trading is popular, which creates high level of liquidity and volatility. But here physical copper will not be delivered. One of the most popular way to gain exposure in copper, we can use derivative products which enables us to speculate on the price of copper without having physical ownership. CFD is contract for difference. When we trade in the same, we are entering into agreement to exchange the difference in price of the asset when position is opened to when it is closed. So the profit or loss CFD position will depend upon the market movements. If we predict correctly, then we get a profit, otherwise we get a loss. CFDs are leverage products, which means that they are only required to put down a fraction of full value of position in order to gain full market exposures. Copper trading has a risk. So for doing the same, we have to create a strategy that manage risk and protect our trade also. So we can mitigate the risk of trading copper by attaching stop and limits to our positions. We have to open and monitor first copper trade. Once we establish a trade, we have to see how we have to trade, and we have to do proper risk management tools for taking position in copper. So once we trade, we have opportunity for doing long in rising market and selling in falling market. So let's look into copper trading strategies. So there are a wide range of strategies has been used. So copper trading strategies will depend upon whether market is trending or consolidating. So let's look into copper strategies for trending market. When market is trending, it means the market is making either higher highs or lower lows. So we have to go into cycle of copper and have trade. When the companies and customer are buying copper for production, the demand pushes market price higher where the construction projects are finished. So there are a slump in copper prices until this goes on the next cycle. So traders seek to match their strategy to trending copper market. They will often use the indicator moving average to know uptrend, downtrend, and MACD to see the buy and sell signal in copper. So you can see the trending market, it is going uptrend. Copper strategies for consolidating market. So usually this market are range bound or choppy market, and here the market will be in range between high and low. We have seen the copper was range bound entire month 2018 between 2.95 and 3.21 due to trade tension between America and China. When market are consolidating, traders tend to favor using historical levels of support resistance to identify points of entry and exit within range. The copper strategy will involve buying a copper at known support level and selling when it reaches to resistance. So let's look into technical analysis. Technical analysis is used for copper trading. So there are some parameters which we have to see. This will tell copper price movement, and this will help us in identifying potential trading opportunities. The first is chart pattern. So chart patterns are the visual representation of price movement. So by these, trader can identify trend reversal and consolidation. And the chart pattern we can use head and shoulder, double bottom, double top triangles. Indicator and oscillator. So indicator and oscillator are mathematical calculation applied to price and volume data to provide additional market trend and momentum. These tools help traders to see whether overbought or oversold, or whether this has divergence or potential trend reversals. So popular indicator we can use MACD, RSI and stochastic oscillator, where MACD tells about trend reversal, RSI tells about speed and change of price, stochastic oscillator tells whether it is in overbought or oversold condition. So by using this indicator oscillator, trader can confirm or challenge their assumption based on the chart patterns, leading to more informed decisions. So candlestick pattern also we can use in copper trading, and this provide us psychological information about market participants. So by these patterns, trader can get insight. He will able to know market sentiment and reversals. So candlestick pattern are doji, hammer, engulfing. So these can be used. By incorporating these, trader can enhance their understanding of the market sentiment and improve their timing for entering and exiting the trade. By studying these patterns, utilizing indicator oscillator, analyzing the candlestick pattern, trader can gain a value insight into copper price movement and make informed decisions. So, with patience and dedication, trader can develop a solid foundation in technical analysis and he can improve his trading skills in dynamic world of copper trading. So friends, I have explained about copper trading. So just go through, you have good idea. This is from my end. Thank you.